Good morning, this Monday, the 20th of January. I'm Grady Wolf, market analyst with Bell Direct. Wall Street closed higher on Friday to post the first weekly gain across the three major averages for the year as the big tech rally resumed momentum. The Dow Jones rose 0.78% on Friday and 3.7% for the week. The S&P 500 added 1% on Friday and 2.9% for the week. And the tech-heavy Nasdaq ended Friday's session up 1.51% and added 2.5% for the week. In Europe on Friday, the positive investor sentiment extended into the European region, buoyed by a strong rally for the mining sector. The STOXX 600 rose 0.68%, Germany's DAX added 1.35%, the French CAC gained 0.98% or almost 1%, and in the UK the FTSE 100 ended the day up 1.35%. Across the Asia markets on Friday, it was a mixed session as strong economic data in China boosted investor sentiment in the region. China's CSI index rose 0.31% on Friday after fresh GDP data showed the Chinese economy expanded by 5% year on year, and retail sales rose by 3.7%, which beat expectations. Hong Kong's Seng rose 0.21% on Friday, but Japan's Nikkei fell 0.31% at the closing bell. Locally on Friday, the ASX 200 took lead from Wall Street's losses on Thursday to post a 0.2% loss on Friday as the financial sector weighed on the key index. The pullback on Friday followed the ASX 200 rising 1.4% on Thursday, so for the week, the key index still managed a gain of 0.2%. On an economic data front on Friday, we had the highly anticipated retail sales, industrial production and GDP readings out of China. The Chinese economy expanded 5.4% in Q4, which was above economists' expectations of 5%, that's on a quarterly basis, and above the 4.6% recorded in Q3, which was a very welcome sign of material recovery in the region post-pandemic. Retail sales further supported the recovery story with a rise of 3.7% in December, which beat economists' expectations of 3.2% and the expectation of a sharp rise, and that's on top of the rise from November, which was 3%. And industrial production in the region also rose 6.2% in December on an annual basis, which also exceeded expectations and was a sharp rise from the 5.4% reported in November. Overall, the economic growth in China is finally starting to show signs of material turnaround, and this boosted the iron ore price and stocks with exposure to the region on Friday. The winning stocks in the ASX 200 were led by Megaport rallying 10.10%, Liontown Resources rising 9.5%, and Lovisa adding 7.73% on Friday. And on the losing end, REA Group fell 2.71%, TPG Telecom lost 2.4%, and JB Hi-Fi ended the day down 2.15%. Insignia Financial is the talk of the M&A world right now as Bain Capital and CC Capital fight to acquire the nearly 200-year-old Aussie wealth management company. Shares in Insignia rose 6% on Friday after CC Capital increased its takeover offer to the value of over $3 billion or $4.60 per share. That's above the $4.30 per share Bain matched earlier in the week. How this one plays out will be very interesting, but it's no wonder why CC Capital and Bain Capital want to acquire Insignia, as the purchase will give the acquirer a market leadership position in Australia's over $4 trillion superannuation market. And Telix Pharmaceuticals rose 4% on Friday after the cancer imaging and therapy pharmaceuticals company received approval from Europe's marketing authorization application for its prostate cancer imaging agent Illuccix, which is already approved by the FDA and TGA. This further expands it into Europe, broadens the company's revenue runway for its leading agent Illuccix. On the commodities front this morning, oil is trading 1.02% lower at $77.88 a barrel. Gold is down 0.5% at $2,700.99 an ounce, and iron ore is up 0.72% at $101.21 a ton. The Aussie dollar is buying 61.93 US cents, 96.85 Japanese yen, 50.88 British pence, and 1 New Zealand dollar and 11 cents. Ahead of the first trading session of the new trading week here in Australia, the SPI futures are anticipating the ASX will open the day up 0.34%. And now let's dive into some trading ideas for your consideration today. Bell Potter has reduced the 12-month price target on Lynas rare earths from $7.70 to $7.20 and maintain a hold rating on the rare earths producer following the release of a second quarter update, including production down 23% quarter on quarter for NdPr, and its revenue and earnings are still dependent on China, where demand remains subdued. And Trading Central has identified a bullish signal on Serve Corp following the formation of a pattern over a period of 36 days, which is roughly the same amount of time the share price may rise from the close of $5.11 to the range of $5.24 to $5.30, according to standard principles of technical analysis. And that's all for this Monday morning. Have a wonderful day and happy investing.